Good day, everybody. Good day. How are you? Today is the December 3rd, 1:07 a.m. I just work the crazy hours like I do, but I want to show you something that got a really good working process now. For all my members, I'm showing you step by step how I get to this point. Now I'm going to show you the results, and that's where I want to make this video public for you all. All right. So what you're looking at is a new and improved and condensed portfolio tear sheet that I used to use, but it's got a little pie chart for the different weightings of these particular stocks. So these are now based upon, because it's December 3rd, 2 days of trading, December 1st and 2nd. And most of these sectors that I picked that were the top performing for those 2 days was commodity and some semiconductor and some health. Those are the top three performers so far. These can change, but what I'm going to show you blows my mind. All right, so we've got six stock here. So STLD 43%, NUE 22%, and these are fairly big companies. Some of them you may know, some of you may not know, but one of them you know because Apple, I believe, is going to use them. So let's start going into it. So this goes out starting last year, 2021, end date. Now, before I continue, this is really important. As part of my way of doing things, let me just pull up. I could do this here. So in here, we've got, this is all from Seeking Alpha. Now with Seeking Alpha, it's getting weird at Seeking Alpha, but we've got 60, I've shown this before, 65% win rate. This seems to be really skewed because of, as I've shown this now 3 times, this call, the Coinbase, which was wrong. Anyways, if you've seen the video, good for you. So we got that. So this is a process that's working, but this is even better because I'm now no longer restricted being on Seeking Alpha. There's gatekeepers. On each article, I send a yay for the article or no for the article. Here I'm not restricted. So I'm showing you the unrestricted. The other condition I wanted was stocks that were less than $100. Okay, like I went through some stocks like I can't remember which one it was, Rio or BHP. They were in the thousands. There was also Texas Land REIT. They wanted $2,600. So I'm not including those kind of stocks. Stocks for the little guy, little person, right? So continuing with the performance. Now this is really important to understand. We've got this one right here. Everyone wants to know about 2.46. This is more realistic, I believe. Anything over 2 is really good. So it's a very strong, sharp ratio. Max drawdown, yes. But on a monthly basis, it's different. So we have a 57% winning day ratio in blue, and then the rest obviously are going to be losers for the day starting back in January 2021. So this does include the last 2 days of December. So we're looking at the past and we're looking at, are these stocks continuing to move up? It's been a very strange year. So here we are going into 2021. This is how strong what I just showed you, that portfolio. The weightings are very important to make sure you get those exact weightings to optimize this. One of the things I've been able to show, if I could show it here, let me see here, is the weightings. So anyways, it rebalances every, right here. No. Where do I want to go? Right here. So it rebalances every month. So it's going to readjust all the weightings. And you can see here it's done really good for last year, and it's blowing away the benchmark, which is usually S&P that I'm using, and it's blowing it away. Okay, like an over 50% ratio. Here's the equity curve for this year, again, starting January, beginning of last year to where we are now. So it's almost 2 years. And it's been very strong trending up. There's some down periods, but generally it's like with confidence, you can say, yeah, this is going to recover. Here's the monthly returns I've shown before for this year, which is more important than last year. And actually, last year was only 1 year where it was down. So it's within the tolerable 15% for the month. Usually 15% is no more. We have 1 month where it's 19%. And when you look at this is all because of this updated optimizer that I'm using. It's using efficiency, the efficient frontier. And as I said, it's rebalancing every month. So the worst out of 2 years, you're going to be down 19%. That's pretty good, especially in a market that we've already experienced this year. This is an excellent portfolio of these 6 stocks. And then a few months ago for September, down 13, 14%. But every other month has been double digit. But you can see here that for just in 2 days, we're at 2.91. So you kind of get a good, strong idea that this portfolio will continue into December of this year. So normally, what else does it show you? That's pretty well it. I mean, I'll include this behind my paywall for everybody. Now, what I'm going to show you is the really important stuff, okay? So what you're going to see here are the 6 stocks, okay? Now, what I do is I have a way to collect the data, the charts, and before I submit to Seeking Alpha, I have to remove a lot of data, a lot of extraneous data, because people get overwhelmed by it. On top of that, there's just raw data. There's no analysis coming from me, but I'm going to do this now with each of these reports, we'll call them. And these would what I would normally send over to Seeking Alpha, but as I said, there's the gatekeepers known as editors, and they may or may not like these, and that's fine, but I'm not restricted here, okay? So please go out and research this yourself, okay? So let's do the first one, which is STLD by weighting. So this one's pretty strong. This is Steel Dynamic. And I'll show you how it works. So this is the exact raw data that I can collect right here. So I usually don't go through the fundamental, but I can give you fundamental till you die. So here, this is Steel Dynamics. As I said, here's the headquarters and all that in Indiana. And you get everything. You get the DAT, you get the cash flow, blah, 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 blah. This sort of stuff, Seeking Alpha wants fundamental. I can give it to them, but, this is just raw data. And for me to go through this, and it will overwhelm people. So I'm going to be honest, it's not really worth mentioning, but it's there. And I can give this to people as a package. All right, next up we got what I look for is a current and quick ratio. You can see it's kind of declined, but that kind of doesn't really matter because what really matters is some more important. But there's people that will want to know this stuff, especially the Wall Street analysts, because that's all they do is look at fundamental, nothing else. So look at the revenue growth. So since 2017. If you ever need to know where the source comes from, it's this. I always put them at the bottom of each table. So in this case, it's coming from financialmodelingprep.com. So going back here at the revenue growth here, you can see it's 0.27 and it's gone up 4%. Very strong growth, especially for last year. Here's the other kicker here. You can see here 2017. 0.18, and look where it's at now, 2.7. Tell me if that's growth. That's profit growth. So that reflects in the stock price, okay? That's why you have a 43% 43% weighting on this particular stock out of the 6, okay? So again, more information. Again, ATR, okay? Here's the interesting, this is what you want to really pay attention to. So the simple moving average for this year, 36%. I don't think I've seen a stock as strong as this out of all the 40, 30 plus articles I've done for Seeking Alpha. Very, very strong. Okay, so we have here 22% over 50 working days, and now over the last 20 days, 9%. Tell me if that's not pretty sweet. So you can see here when you go into the tip ranks, um, as I shown, where we're getting 65% win ratio. What I'm trying to tell you is this process worked. Okay, I got to keep this page up. This is too exciting for me. So this right here shows you that this process worked. And I'm seeing these really strong companies just for the last few days because this stuff more than works. These are the highest performers, and I'm only really focusing only on the S&P 500 level to get to make it worthwhile for me to publish these on Seeking Alpha. But there are other companies here that are way better, as you can see here. All right, so here's another good one. The stock price at 46, 2017, but that, everything went down. Okay, so we're looking at the top performer sectors. What did I mention? Kind of the metals, the um, uh, semiconductors was number one, and number three was medical. There's no medical in here. Okay, but you can see just between 34 and $55 in 2 years during a pandemic, I might add. Okay, very beyond uh, that's impressive when everything was shut down. But if I go and look at this, what is this company called? STLD, was it? Yeah, STLD. So you could probably see the performance over the last 5 years. What really matters. So this is a $109 stock. Look at the 1 year. It's been steadily moving since last year, as well as the 5 year. It's definitely on a rise. But this is what is the impressive part: the steepness of the last 2 months. That's why it's at 40%. Okay, just so you know. Now, a lot of people don't really care about sustainability. I don't either. I don't really care about it, but there's a lot of activist pension funds out there. And look at this. This is pretty standard in a lot of these kind of companies. Outperform. You're not getting Apple at outperform. You're not getting any of the big tech at outperform. Very rarely you'll see that. And yet they'll tell us, oh, well, we got to be all climate friendly. But yet a steel company is outperforming with its ESG rating, outperforming. So that's steadily price. You can see here now. This is the due diligence. So what's happening here is the analysts are setting the price target, and guess what? This is what causes the acceleration of this. They set the price, and STLD is now meeting it, right? That's why we see that. That's a very good sign. These are the sort of things I do and analyze that pretty well no one else is doing. And you can see here revenue. Now, this is estimate, okay? So they know this year is the peak. Next year it's going to slow down. So you'll be able to reach on the tail end probably for the next month on this kind of performance, but they do expect it to decline. So this year is the peak. Okay, so they do have a dividend. EPS, you can see how strong it is for this year, half next year, and so on and so forth. Net profit, it's going to be a quarter. So they're going to be going back into decline. So we're definitely on the tail end of this company, but it's doing really good. So I'll be able to show you the forward guidance on it. This is also important as well. This is from Trading View. Okay, so this is the largest probably stock website in the world for independent stock investors. Look, it's 180 million. It's like at least double the size of Bloomberg. Okay, so look at this. On Seeking Alpha, they'd only allow me to go up to a day. Okay, but you can see here on an hourly on the intraday, it's very strong. This may taper off. I can't say, but I just want to show you that this has been a very strong company, right? I mean, unreal. And again, it gets smoothed out, very strong. So it does go in waves. So you would be able to buy it here, and that would have been I guess late October, early November, and you would have gotten that nice upswing there. Really good. Now here's the important one, the RSI, where what's going to pretty well happen because everything's you can see it goes in waves. So it's already hit. It's 70 on the RSI, so it'll probably pull back. And if there's enough momentum in the price going into next year, there maybe it will come back, right? Based upon the last 2 years' performance. This is another critical one: is the data prediction. This is Monte Carlo. This one is normalized distribution. What you want to see are more predictive paths pointing up than versus down. Okay, that's really, really important. And of course, you can see here we have a higher probability of expected higher price versus lower price. Another one that's very helpful on a 30-day basis is that the regression says that this may flounder, but still the performance is pretty strong. Now, this is another important factor is the shorting against the total traded volume. So you can see here's the price moving up, but when it drops below 50 for the shorts, shorting expectation, how many traders are shorting? Less than 50% are shorting versus uh, or like less than 50% are shorting versus putting a long on it. So when it's obviously lower amount of shorting below 50, there is more um, expectation to long it. So you could see around here back in April when it was lower, more shorts, it did have a major run up as well. So that's a good sign as well. People don't use this type of analysis; and they just kind of like fluff it off. Insider stats or the insider activity going on by executives, another really useful metric. We can see here most recently for 2022, there's a sell, sell, sell. So some of the executives are selling. So this is telling you and signaling to you that I'm not saying this is useful. Doesn't mean it's all and be end all and be all. So you can see here for the in November we have a buy, another buy. So that's pretty even. Another buy, 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 buy. So more people are buying it back in November. And will that continue? I don't know. But when you have the analyst saying that this is a strong buy as well, then it's safe to say, yeah, maybe. Okay, let's take a look at our next one, which is new. Okay, so this one is, so we got 6 stocks here to look at. So I'm doing the equivalent of, so this is Nucor. I think this is a gold play, um, if I'm not mistaken. All right, so let's take a look at that one. So here we go. Let's drag it over. All right, so most of this the people wanted is there. So this is now Nucor. Okay, more fundamental that you wouldn't see in my Seek and Alpha articles. Again, it's not that strong for the last 2 years. We will get these metrics until the end of this year, um, at all. But you can see here with the growth. I mean, it's almost 4 times bigger than 5 years ago. Too negative, but again, 2021 was strong. Gross profits really mushroomed. Similar pattern as the other company I just showed you, Steel Dynamic. Net worth income. Wow, that's strong growth. This is a recovery company. Or let me just see, is Nucor um, see, okay, let me just continue along here. So this looking good for 2021, right? So let's look at all of this. If it's meaningful to you, that's great. Okay, here's the important part. Pretty strong comparatively to other stocks I've seen. That's pretty good. SMA 50, that's pretty good. But what really matters is this one for 20 days, 8%. That's pretty strong. But again, a similar pattern along here, what's up 50% between 2017 and 2021. Market cap, it's gone up about 25%. It's doubled since 2020. That's definitely pandemic related. So again, here I keep saying that sustainability, ESG is at outperformance. Again, that's a good thing. Again, the technicals. Oh, sorry, this is the targeting. Same thing as Steel Dynamic. You can just see it. It's just keeping up with the prices. A lot of time, it's just pretty impressive. So here's the estimate. 41 and a decline. Same as steel. This is production happening now, goes into decline. That's what they're estimating. They do this on purpose to stay ahead of the game. So if they know that they're going to perform better next year, but they want to have their stock move up, they conservatively underestimate their revenue, their profit, all that, just for the stock price a year from now. So, hey, like we beat it. Um, EBITDA really declining. Now, will it matter if it continues to move up? It depends. Um, because everyone wants these companies shut down, even though their ESG is outperforming. Doesn't make sense. Um, okay, continuing along. Okay, now we're getting into the recommendation. You can see this buy and strong buy. I mean, you've seen the market. It's flat. But look at these. These are awesome stocks. So it's almost low point here at $100. Now it's almost pushing 160. Uh, so again, 154. So pretty pretty strong there. Again, you can see the waves here in the MACD. They diverge, bigger swings, but you got to time them right here. So this will go into another decline, but you can see they go through these cycles. Probably it looks like a 2 month, maybe a 6 week cycle on the upswing. You want to be able to catch those. But again, look, we're already at its 70 on the RSI. This will definitely pull back, and it pulls back down to its oversold, and it bounces back. So this is typical in these performers, but they do trend up. But again, are we on the tail end of it? We don't know. But for December, this is one of the best performers for a current over 2 days. There may be other performers that may come in, but so far for November, the strongest was these metals and mining companies. So again, data prediction, look at all pointing up more on the right side of this last value. But here's the thing. So this is now predicting it may go into a downswing. So that doesn't mean it will, but that's why I do this type of analysis where I get a bunch of different views. Uh, but again, look at that. That shorting is now over 50%. So people are now flipping on the trade, put a short in. So this will mean most likely that this stock could decline. But still, if you want to get out of the day trading mentality and go into more investing as well. Here, let's see the most recent here. So along through here, we see sell, sell, sell. Yeah, up to end of October. All right, so that's that, but still a good stock. The next one we got queued up is SLB. Let's pull that up here. Schlumberger is an oil play. This is a weird one, but this came out on top. You see, it's already 2% today. Let's look at the 1 year bid move, and it went flat. Challenge. It's a challenge. 5 year decline, but still, at the low point here in March 2020, and it's kind of moved up a little bit. Nothing to get excited about. So here we are in our report. So this is Schlumberger out of, it looks like it's Texas. Yeah. And this is an oil services provider, infrastructure services support. Um, let's see here. So again, yeah, you can see the current ratio has pretty well been flat, but revenue growth, 0.09. So it was negative last year, last 2 years. So it's done okay, but this is why you got the top two, and then you start to move into the 14% weighting on this one. All the stats you want. So this one matters here on the SMA, or I like the SMA. Look how strong that was for this year. Wow. 27%, SMA at 50, and no growth for the last 20 days. But as I showed you, it's already up. 2% was it? Yeah, 1.99. So it may start to accelerate here. One day, tough to say. Enterprise is stock price 74, so it did suffer. Uh, Again, I can't say if you want to take this or not. Market cap is at half of what it was. Sustainability, again, it's only at average. So if that matters to you, it does for certain people. But you can see the stock price has done fairly well. It's going to go into another downswing, but the question is, will it come back? Um, the problem is with these kind of companies, you do see the trend up from here at, I don't know, 15 bucks. Now it's at $50 2 years later. That's better than crypto, right? Here's the estimate 27, 32, 36, 41, 44 estimate. So they're anticipating some good growth here. That's from the company themselves. So you don't worry about the dividend. So this is a good company maybe to buy now, but we'll have other analysis that we can use to say yay or nay. So here you can see all the strong buys, again, from the technical analysis from TradingView. That trend line's looking up, but when you buy into the upswing, you may want to wait it out. And you can see it's kind of potentially going into a downswing now based upon this MACD. RSI, yeah, you can see it's already peak, dropping back. It's already below and very close to the oversold. So it's at midway. So it's got some nice room to grow up until the next cycle on the overbought. And you can see here, each time it does pull back, but this time it doesn't look like it's going to pull back. So this could be a nice stock to own. And that is $52. Pretty good. Because what technicals does, it's not to forecast. We already know we got a good stock here. What we're doing with technical is to time orders. What's going on with the orders potential, but not for forecasting. It's the time trades. Let's see here with the Monte Carlo, we got more upswings in the predictive past. Same thing on the normalized. Actually, we could see a little bit of a peak there in the fat right tail. Fat tails on the right side is what you want. Regression, it's going to stay stable. So this could pop. Not today, not a month, maybe in another month. And right there's what you want to see, that drop in shorting. So here, another way to look at everything is for November, we've got sale, 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 plus option, sale, sale. So everyone's selling in the company. That's a tough one. Let's see what else is going on here. Now, towards the bottom, we have more a buy. Lots, I got buy, most majority selling. So that tells you what's going on with that price. Okay. Um, Lots of analysis here. Next one we have is PTEN. PTEN. This was Patterson Energy, UTI. Let me just bring that up. PTN. So what will happen is each day I can do this type of analysis, and if something else performs, we can add it, or we can drop the underperformers, and if they start to show, we can bring them back in later on. Um, right now. So this is P10, Patterson. So 5 day, not much going on there year to date. Now remember, we're now moving down to 10% weighting. So this is definitely going to start to weaken in price growth. Yeah, it's declining there. Profits dropped. Let's see what else we got here. Yeah, we want to see our SMAs. That's what we're after. So that's not bad, not great. You can see here the SMA is at 20. So here at the enterprise level, it has shrunk. Market cap, it's now a quarter of its size roughly from 5 years ago. Uh, Again, average performer on the sustainability. Yeah, you can see the weakness there. It's been plateauing. 2020 revenue. Again, this is similar to Schlumberger. Not as strong. Well, next year will be stronger and it'll start to build. So for the next 2 years, this might be okay to hold. Based again, this is all coming from the estimates of the company itself, right? So EPS that looks good right there for next year. So it's probably a good stock to hold based upon that where it's gone. EPS will be 4 times prior for this year, so next year will be 4 times higher roughly. EBITDA, well, that's pretty strong there too. The difference between the two, like 3, 4 times off the top of my head. So that's pretty good. So next year is going to be a good year to hold this. You can see here, everyone's saying sell, sell, sell. And then on the intraday here, we got some buys. And I can kind of see potentially why on the Fibonacci. So it's overvalued here at above the 235. Once it starts to drop here into 382, and if it does, you kind of may want to jump in. Bollinger, see, it did well in that latest upswing, and now it's starting to weaken. So these are the hard parts of these kind of calls. Now, historically, this should come back. Like right now, we're at 50 on the RSI. It should come back. So it may drop a little bit, but might be a time to consider scaling in. Um, and just do the dollar cost averaging typical and let it run up if it does and add more as it does. Because look at this. That's pretty strong on those predictive paths. And look at this. That's pretty strong in the price expectation to move up. Regression. So there's what could happen. So it may drift a little bit, but in the last week or so in December, it may come back. It may come back. And right here is what you're looking for. Right now, as more people shorten it, once that drops below 50, I'd probably consider it. Insider stats again. So we got here in November, sell, 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 and selling. So there are some selling going on there. Uh, but if you timed it, you'd probably be able to time the upswings. It amazes me that people would just say, "Oh, it doesn't mean anything." Really? It's always proven to me that these do mean. So you got some selling going on. Even not much for November. Hmm. All right, so that's that. Okay, so let's continue going along here. Next company we have here is P10. So we just did P10 ON. I think this company is the semiconductor. This is ON on semiconductors. So semiconductors right now is strong. What I like about this company, it's fairly affordable. The other ones are, you know, look, everyone's on it going on about Intel and what's the other one? NVIDIA, TSMC, uh, what's the other one? And AMD. And this one's probably going to surprise people. So let's take a look here. So here we go. All right. All right. So right now, what we're looking at is scaling down. Okay. Yeah. So this is out of Arizona, this company. And ratios are pretty well the same, it looks like. Grew a little bit, but I mean, that's pretty good momentum right there, where it's doubled since 2019. That's encouraging to see. Now, if I'm not mistaken, did Apple select this company for semiconductors? Um, I think this is potentially big news. Let's see here. So growth, revenue growth, yeah, it's fallen. It's half of what it was in 17. Profit's looking pretty good. Where's the net profit? Uh, Operating growth. Yeah, I mean, between over the last 2 years, this has been pretty strong for last year. Okay. Let's see here. There's lots of other things you can look at, slice and dice it different ways. So this one for data, again, very strong. Well, not it's strong, not bad, decent so far for this last month, 3.6. Enterprise. Okay, so this is stock price. So we went from 24.17 to $53. So it's doubled in the last 5 years. That's pretty good. Market cap. So we've gone from 10 billion to 22 billion. Very good. Sustainability with average. Okay. Look at that. That price gone from 10 to $70. What do you think? Would you buy it? I would. Um, and it's kind of kept in line on, at least on those upswings, and kept up to date with a lot of what the analyst targets have set. That's pretty good. Okay, now this is the important one. These are the estimates forward guidance. Revenue at 8.3, 9.6 over the next 2 years. So that's fairly conservative, maybe a 10% growth. This I like. Okay, so it was a strong year this year. Next year, 4.49, and then it's going to be 50% higher in 2 years. That's pretty strong growth. Um, Net profit looks the same. That's pretty well I'd focus on, but again, you can slice and dice wherever you want. Again, look at this. Strong buy for daily, weekly, and then the intraday saying buy. So, so right here, you can see it's overvalued, but it's nothing but trending up. So for a little company, and the shocker is how I've looked at many stocks, they have virtually collapsed this year, but this has trended up. Very strong. Very strong. Let's see here. Okay, Bollinger, that's pretty good. Right here, so you can see here, this is impressive. The MACD drops, but it has very little impact on the price. right? So if you look at the, yeah, I can see why. It's like a lot of people don't know about this company, and it stayed at 60. That's pretty good. So if it hits above the 70, doesn't affect the price. I mean, it may go flat a little bit, but it doesn't appear to to depreciate at all. That's pretty strong. Okay, so we got here more predicted paths, and again, same thing with a normalized distribution. Okay, so it's going to slightly decline and may come back. I think this is a pretty good one. A little uptick in the shorts there. Again, okay, so this is the key here. Got sell, sell. So here's the CEO now. He's selling, but back in July. What's the guy's name? Hassan El Khoury. So got two sells there. Well, that's not too bad because that, October, there's different reasons why people sell and buy. But generally, we're looking for trends. So right here, buy, buy, buy. So they're selling since August, probably because they expect it to go flat. Hmm, interesting. That's pretty strong, a very strong stock considering the general trend over the last 2 years. Pretty strong. Okay, that's a semiconductor. So this is our last stock here, JJN. This is not a stock. This is an ETF now. So what I've done is, if certain ETFs, like I said, commodity looks strong, I'll add them. I have added gold, silver, and copper as well, ETF. So the one that made it through the cuts and elimination was nickel. So this is something that is encouraging. I don't think we'll be able to get, uh, yeah, there's no analysis on ETFs, but we can take a look at it in good old, so again, $37, up 1% today, 5%. It's a steady Eddie, as I like to call them. 1 month performance. Yeah, this is more like an investment. Let's see, it's 6 months. Yeah, it's coming out of a bottom. Year to date, not much growth, but again, it's 2%. So that's pretty well it. Okay, so that's what's going on. Yeah, I mean, think about it. There's a reason why we get a success rate at 65%. Anything over 66% is pretty strong. As I said, for this one, that's pretty simple. We got Coinbase in there. Trade Tip Rank got it wrong, and these are sourced out from Seeking Alpha. So there's that. Now, again, with Seeking Alpha versus what I just showed you, I won't be writing these kind of stocks for Seeking Alpha. These are way better performers than you would get in Seeking Alpha. I mean, but come on, man, you got over with 4,700 stocks to choose from, and you've got how many analysts throwing all these different opinions at you? It's pretty overwhelming and confusing. Here, we're just focusing on the top two sectors, and that was, as I said, was semiconductor, metal, uh, mining, I believe. So those are fairly strong performers. Some of them are really good in a challenged market. But you can see why this process works. So hopefully you like it. If you want more info, you want to get on our email list, fontlabs.net/book. All right. Now, I just raised my prices. So we're going to continue with that price based upon this information. I can do this analysis day and night. On top of that, the important thing is uh, compared to crypto, uh, crypto's a challenge. It's too volatile. There's no rhyme or reason what moves or what doesn't move. I've been kind of experimenting for the last week. It's really hard because there's no trends. Here you're going to see trends, and with crypto, particular coins, They'll have a trend for a couple of days and then they just drop back, and it could be pumped by who knows, and it can easily be manipulated. I use Kraken, but I'm just going to say right now, uh, uh, crypto's challenge is a challenge. Also with Forex, you could do well at Forex if you want to be crazy and add leverage, but look what happened with FTX when they added leverage. Here, with stocks and maybe the odd ETF, these are predictable movers. I mean, you look at the ON, like there's some other volatility in other ones, but you can kind of time it on the upswing by these kind of reports that I can generate. So I like stock, and it's predictable, and it can, do fairly well. You're not going to make 10% overnight with a crypto when it performs, and then you lose it the next day as well. So that's pretty well it. And as I said, you want to kind of get more into the investment side of things. And day trading, it's hard, man. And if you do well, that's great. But the commissions will get you. And I mean, that's why I'm on Interactive Brokers, because commission fees are much lower. But still, for the investing, that's where you want to keep it. Other than that, thanks for watching. Don't forget to get onto the books, and Sayonara. Have a good day, good night, wherever you are. And I'm telling you, I'm even impressed with what I've just done.